Welcome to Dinar Trend Tracker. We are reporting today on an event that has grabbed the attention of market watchers in every major capital across the world and caused waves in the financial markets. A currency that has spent decades mired in wild conjecture and futuristic optimism has suddenly found itself in the spotlight. The Iraqi Dinar, abbreviated IQD, is supposedly making its way onto the data feeds of key financial terminals, such as the pervasive Bloomberg systems that provide real-time data to trading desks throughout the world. This is not some abstract idea for the future. Along with the most well-known currencies in the world, such as the dollar, euro, and yen, this report details its presence in real time. Numerous prominent observers in the field first wrote off the concept as little more than a financial pipe dream, an anachronism befitting an economy long since out of date with today's high-speed routing networks. The newly released data, however, points to a major shift. Within the past 24 hours, the focus has changed from whether to what next. No matter what happens after the currency goes off the ticker, it will be a watershed moment that changes the way the world's financial system sees, handles, and acknowledges it. The complicated repercussions of this seemingly little incident are making economists, traders, and institutions rethink long-established norms, and there is a mad dash to figure out what happened and why this unexpected appearance occurred. News reports from major financial centers throughout the globe, such as Dubai, New York, and London, depict an image of true astonishment. The usual cacophony of the trading floor allegedly transformed into a cacophony of urgent questioning in the wee hours of the morning as algorithms got to work and markets opened. IQD takers, familiar with their daily scans of currency pairs, would have noticed the taker's distinctive glow on their screens. Spectators undoubtedly heard a collective "Is that Rio?" mumbled across desks as an initial reaction to the news. Refreshed feeds were used. Despite thorough verification, the data remained unchanged. There was no data issue, no ghost quote, no testing error here. Using the vital infrastructure of global financing, the liquidity networks, routing systems, and complicated execution algorithms, the Iraqi dinar was quoted with live bid and ask price, a service that is reserved for legitimate, recognized, and traded assets. Must have realized what a tremendous step it is to go from not existing in these systems at all to actively being quoted. It is assumed that institutional frameworks, data integrity checks, and settlement channels are partially in place because the mere appearance of live pricing signals a deeper underlying readiness. The financial industry is taking a deep breath as it processes the fact that an asset that was once only traded in small physical markets is now a vital part of the digital infrastructure of global markets. This unexpected exposure on well-monitored platforms like Bloomberg and key routing terminals did not happen by chance. In its very essence, it is the product of enormous cooperation, careful preparation, and the surmounting of substantial technological and regulatory hurdles. There is a high bar that each currency must jump before it can join these exclusive financial data streams. This involves procedures such as thorough data validation to guarantee the authenticity and verifiability of the pricing. To handle trade settlement, elaborate clearing agreements are set up. Locating sources of liquidity to guarantee the execution of transactions and rigorous compliance screening to conform to international regulations pertaining to financial integrity and anti-money laundering. The fact that the IQD has supposedly surfaced suggests that these behind-the-scenes goals have been achieved, at least partially. All signs indicate to a coordinated operation including many levels of government, private organizations, and even central banking authority. It implies that Iraq's economic reform, which has been going on quietly for the past decade, may have culminated in this one moment of global acknowledgement after a long process of managing oil income, increasing foreign reserves, and establishing new financial frameworks. For the dinar to go from being a speculative item to a legitimate, transparent trading presence and a recognized member of the financial system, its international partners, clearinghouses, and main correspondent banks must have agreed on this. There are a lot of people who have had actual dinar notes for a long time, and this is a big deal for them, especially because mainstream financial circles were skeptical of them. The long-term hope that stability and economic recovery will eventually show in its value prompted many to purchase the currency after Iraq's 2003 restructure. When the IQD appears on TVs around the world, it represents more than simply a financial statistic for this community. They see it as a huge, almost unbelievable, confirmation of their long-standing position. A new set of complicated realities, however, comes hand in hand with this instant of recognition. The mere presence of a currency in a data flow does not guarantee a particular valuation shift or instant frictionless convertibility at any particular location, and this is critical to grasp from a purely formational perspective. There is a long and winding road from a live data taker to an easy liquid real-world exchange. Complying with strict anti-money laundering and taxation regulations that will control cross-border settlements, learning new fee structures, and navigating complex exchange processes are all part of the process. In the early stages of a freshly traded asset's lifecycle, the market is typically characterized by high levels of volatility, huge price swings between buying and selling, and speculative buying and selling that distorts prices before a stable equilibrium is reached. Although there was much fanfare surrounding this event's debut, the real defining feature of this new chapter is the role of market mechanics in regulatory processes. Not only is the Iraqi Dinar being listed and traded on worldwide platforms, but its potential consequences go well beyond mere market curiosity. They get to the heart of Iraq's ability to control its own finances. New opportunities for the country's economy may arise as a result of this development. People are starting to talk about the idea of settling trade deals in IQD, which would mean that Iraq's huge imports and oil exports wouldn't have to rely solely on US dollar transactions. This would be a significant change. Iraqi debt, including government bonds, could potentially be issued in the country's own currency in the future. This will boost the domestic financial sector by allowing investors from both inside and outside the country to hold assets denominated in dinar, instead of depending only on foreign networks. Assuming these plans come to fruition, Iraq would have considerable agency over its own fiscal and monetary fate, shifting the power dynamic inside the country's financial architecture. It might be the beginning of a shift away from an economy that uses foreign currencies for large-scale transactions and toward one that uses its own currency to compete on a global scale. To become self-sufficient and resilient in the face of a complicated global system, this is a formidable strategic goal for every developing economy. It must be stressed, nevertheless, that none of these revolutionary opportunities occur by magic. What comes next will determine the fate of the ambitious goal of financial sovereignty, which is to settle trade in the native currency and establish a strong domestic bond market. After the first thrill of recognition wears off, the process of establishing the institution's reputation must begin in earnest. Despite a positive reaction from the markets today, stability proof is required tomorrow and for years to come. Economic governance, consistent policy stability, predictable monetary management, and transparent governance that international partners can trust will decide the future trajectory of the dinar, not just one headline. Making an appearance on international terminals is insufficient. As such, the dinar must function there. Its long-term viability depends on its consistent liquidity, stability, and competitive spreads. In today's uncertain and competitive global economy, Iraq must demonstrate to the world that it can establish itself as a credible and trustworthy financial actor. Creating and keeping that trust is a long and challenging process, but it starts today. Skepticism is a valid and essential part of any analysis, even in the midst of all the excitement. Visibility is not a guarantee of longevity or worth, as seasoned economists, institutional investors, and traders are well aware. The trading floors and economic think tanks are already resonating with a series of urgent concerns. After the early buzz and speculation die down, will this launch still be relevant? The most critical question is whether there will be a deep enough market for dinar. Can actual, large-scale institutional flows be accommodated without leading to enormous price disruptions, given the current supply and demand? Will there be any disruptions or inefficiencies while exchanging IQD for more stable currencies like the dollar or euro? On the other hand, as the amount and level of pressure increase, will there be friction, delays, and capital controls? Whether or when foreign central banks will ever contemplate adding the Iraqi dinar to their official reserves is arguably the most important concern regarding the long future. A move that would herald the final, permanent embrace and incorporation into the international monetary system. These are not just wild guesses. They are the key performance indicators that will define the IQD's future as a mainstream currency or as a unique asset with limited use in big-scale transactions and investments. What is happening here is more than just a financial thing. A geopolitical dimension is intrinsic to it. The symbolic value of a nation's currency extends well beyond that of a medium of transaction. In international affairs, it stands as a potent emblem of national credibility, strategic alignment, and sovereignty. By helping to bring the IQD on data screens around the world, Iraq is sending a strong message to the international community. Let us engage you, we are present and prepared. Iraq is clearly aiming to change its reputation internationally, and this step is a sign of that. This is an effort to change the long-held belief that the region is mainly an oil exporter or, even worse, a dangerous hotspot for war and instability. Rather, it is establishing itself as a new player in the financial sector with the explicit goal of achieving economic autonomy. Now more than ever, Iraq's regional neighbors, global investors, and sovereign wealth funds must re-evaluate the country's profile. Baghdad appears to be aiming for not just energy sector importance but also a clear and legitimate presence in the finance sector, as this one act of financial openness discreetly but dramatically repositions Iraq within the intricate Middle Eastern economic landscape. This inclusion might also send a diplomatic message, suggesting a willingness to conform to global financial rules and a greater degree of congruence with international banking institutions. Even as we rejoice in this newfound exposure, we must not lose sight of the seriousness of the dangers that come with it. Like every freshly tradable currency, the IQD's early trading phase will likely be quite tumultuous when it emerges from its extended period of dormancy. Extreme volatility is something that market players should brace themselves for. There may be no prior notice of a price gap, in which the value suddenly increases or decreases substantially without any trading taking place. In a matter of seconds, liquidity, the ease with which one may buy or sell, could vanish, rendering orders unfulfilled. As the underlying technological infrastructure struggles to adjust to unexpected and new volume dynamics, orders may not execute cleanly or only be partially fulfilled. Contrast this with the euro-dollar pair, a mature, stable, and predictable market. Financially speaking, it's like venturing into uncharted territory, full of promise but also teeming with danger. All participants must exercise the utmost caution in this setting. Since making rash or emotionally driven decisions in a market as unpredictable as this one can cause major problems, planning and discipline will be the deciding elements. The market will likely go through months, if not years, of adjustment, testing, and maturation before it reaches its natural rhythm, which will pave the way for price discovery and stability. Looking at it from a larger perspective, this might be a major test for all of the world's currencies. The established order of wealth distribution has been mostly unaffected for many years. When it comes to global reserve anchors, the US dollar is unrivaled. For a long time, the yen has been Asia's reliable currency, while the euro is the strong continental counterpart. Countless lesser national currencies have remained on the periphery of international circulation, seldom re-entering serious circulation or being utilized for significant cross-border settlements, beneath these giants. That long-standing paradigm is up against an intriguing new challenge today. As the Iraqi dinar begins to be quoted live against the world's top currencies on worldwide terminals, an intriguing structural and philosophical dilemma arises. Through rigorous policy, clear data, and sheer national willpower, is it possible to restore and sustain the validity of a currency that was previously stigmatized and linked to economic hardship? Other countries with underrepresented or defunct currencies may be encouraged to pursue a similar rebirth if the IQD is successful in demonstrating robustness, maintaining liquidity, and establishing trust. Countries that have been dependent on third parties to facilitate their trade could start to see a way to become financially independent again. A more pluralistic financial system and the idea of sovereignty are at the heart of this nuanced but possibly seismic transition away from an immediate valuation. From a technical standpoint, it is extremely critical to comprehend the deep dynamics underlying this historic event while placing an order for IQD in this new environment. When we look behind the scenes, what do we see? Which dark pools or exchanges are backing those orders specifically? That big banks or liquidity providers are getting involved to handle them and supply the opposite side of the deal. How exactly is the dinar being linked to major currencies like the US dollar, the euro, or the British pound, and what are the specific conversion methods and settlement protocols? Maintaining consistency in the first few hours and days may seem challenging. Varying platforms and brokers will have vastly varying spreads of the gaps between the buy and sell prices. This variance is a reflection of the market's depth, the level of commitment from market makers, and the profound ambiguity around prices. Full two-way conversion may not be supported by all institutions just now. In order to reduce their own risk, some may implement stringent execution limits, slower batch settlements, or increased costs. While the new infrastructure adjusts to the live demand, orders may partially or completely fail. That being said, this is not always manipulation. And this is to be expected as the market structure is still developing and learning to stand on its own. How open this route is and how trustworthy its clearing and settlement procedures are will be the real indicators of how developed the market is. As the media frenzy increases, it will be crucial for outside observers in Iraq and around the world to keep their vision very clear. The deluge of sensationalist footage, social media comments, speculation, and headlines is already picking up steam. While some will exaggerate the dangers, others will hail it as a surefire boon. The market is in for a deluge of unfounded claims, tales of secret riches, and assertions that cannot be confirmed. The background noise is going to be really annoying, but smart people will figure out how to tune it out. Basics based on cold, hard, verifiable facts must take center stage. Measures such as the volume of trades, changes in spreads, regulatory pronouncements from exchanges or central banks, and the recorded actions of major institutional players are all part of this category. What is the official response of central banks? How do the main liquidity sources determine the daily risk price? Throughout the day, how does the volume of trades change? The real narrative about the sustainability of the IQ does emergence will be revealed by these measurements, not by internet rumors or bombastic discussion. Discipline and judgment are the defining characteristics that will distinguish realistic analysis from idealistic fantasies. A single reality appears to be resonating throughout trading rooms, news studios, and internet forums as this emerging economy is exposed to the harsh, merciless light of global financial scrutiny. The one who was sleeping has, in a sense, woken up. No longer is the Iraqi dinar confined to the realms of theoretical discussion on online forums, lost artifacts, or collectors' obsessions. In the world of international finance, it is now an integral element of the daily, ongoing dialogue. Traders are currently observing the evolution of its order books. Experts in risk assessment are rushing to include this new element into their models. Hedge funds are actively searching for opportunities to arbitrage early in the system. Regarding its monetary and geopolitical ramifications, economic think tanks are writing position papers. Some will jump on the bandwagon first. Many will be hesitant to participate due to the high level of volatility, while some will try to take advantage of the obvious spread differentials that emerge in newly established markets. Significant risk and consequence will accompany each decision taken by those involved. Previously skeptical and dismissive, the international financial community is now closely monitoring developments. On its own, that change represents tremendous advancement. What was once inconceivable is now measurable. No longer is it disregarded, instead, it is shown, processed, and, for the first time, traded electronically. Now that the dinar is back in the spotlight, Iraq has the enormous task of demonstrating, via consistency and stability, that this reawakening is not a passing fad but rather the beginning of a long-term new economic reality. What does this shifting terrain imply for people, especially those who have held onto the currency for a while? Because of this change, previously unanticipated processes and difficulties have emerged. In order to succeed in this emerging sector, information dissemination must take precedence. It is critical to know how particular banking, brokerage, or local exchange ESA financial institutions intend to process IQD settlements, redemptions, and conversions. The regulations, fees, transfer periods, and liquidity channels that are available will differ greatly from one institution to another. It could become troublesome if these new mechanics are not understood. The aforementioned volatility is something that participants will also have to deal with. Instead of committing to a full position all at once, market professionals in this atmosphere typically scale their exposure to risk. A newly traded and extremely volatile currency adds an extra layer of complexity to the already complex world of foreign exchange operations. You can't call this a mature market. This ecosystem has not been tested. There is uncharted territory here, yet the road forward is clear. Everyone from small holdings to the biggest institutions will have a lot to learn in the next few weeks and months as the system adjusts to this unprecedented but exciting transformation. This is not the final destination, in the end. A fresh, exciting, and perhaps unpredictable chapter has begun. Once obscure, the Iraqi dinar is now front and center. By assigning it a ticker and a real-time price, the international financial system has recognized its existence. The true test is about to start now. Endurance, liquidity, and most importantly, trust, are the test criteria. The world forex market is worth $6 trillion every day. Will the dinar withstand this huge pressure? By implementing strict monetary policy, open and honest regulation, and consistent economic reform, will Iraq's institutions be able to foster and grow international confidence? Its subsequent acts, rather than the initial enthusiasm around its launch, will determine its trajectory. What many saw as an impossibility may, in fact, be laying the groundwork for a new economic age for the country if the answers to these questions are affirmative. It will be considered an outlier for a short while if the difficulties with liquidity and volatility are too high. Not only is everyone waiting to see the price, but they are also eager to see the proof.